What's good, all my trader and investor homies? Chinese stocks going to be delisted? What in the world is going on? The U.S. House of Representatives just passed a bill threatening to delist some of the biggest Chinese stocks out there. Alibaba, NIO, these are stocks that are huge, companies that are huge. It has investors a little bit worried. So is it going to happen? Is Baba going to get delisted? Is NIO going to get delisted? No, absolutely not. You have a better chance of winning the lottery than you do of seeing Alibaba and NIO get delisted. So what's going on? So basically, China hasn't been playing fair throughout this whole Rhinoceros Rex situation. And that's something that both sides of the aisle can agree on, which is rare in today's political climate. But Democrats, Republicans both agree that China has been basically up to no good throughout this whole situation with their numbers reporting, with PPE, with a bunch of different aspects. Plus, you have companies like Luckin Coffee, which was thought of to be the Starbucks of China, playing games with their accounting. They were cooking the books. They were going Goodfellas casino style on their books, Italian mobs style, and that's not a good look, and investors got crushed when Luckin Coffee got caught. The thing fell off a cliff, it did a nosedive, and all stocks, all companies should have to do their accounting on a level playing field. That's only fair, and it's only right for investors. So these companies, NIO, XPeng, Alibaba, JD, they should have to follow a accounting method that the United States companies have to follow. So that's fair, that's okay. And I think they probably will have to shift up their accounting methods, clean up the books a little bit, but those huge corporations are not going to get delisted, I can guarantee that. China is well known to be the EV mecca of the world. They are going to eliminate all gas engines, all combustion engines by the year 2035. And what that's doing is it's creating a freaking fire, a FOMO fire of EV in China. So anytime we have the opportunity to buy, to invest in some of the Chinese EV titans at a discounted price point, we need to take advantage of it. So in today's video, we are going to be breaking down my favorite Chinese EV stocks to buy at a steep discount. If you're new to the channel, hit that like button, hit that subscribe button, and hit that notification button. Hit all the buttons. We talk about the hottest stocks in the market every single day. Also, if you're looking for the top broker out there right now, check out the link in the description after the video. Webull, my preferred broker, is offering 4 free stocks. When you sign up with my link, deposit $100 or more, you will get 4 free stocks valued up to $1,600. All right, guys, let's talk about the top Chinese EV stocks to buy at a discount. And as always, let's secure that bag by making smart investments, sound trades. Let's get it. So right now, the Chinese EV market is expected to reach about 14% by the year 2022. Here in the United States, we are currently at an EV penetration rate of under 4%, and that is steadily growing, but not nearly as fast as in China. With Europe likely to reach about the same percentage by the year 2022, this is happening because China is basically making it impossible to buy an internal combustion car because they're trying to phase them all out by the year 2035. This is creating massive amounts of buying in the EV market in China. If you want a car in China, your best option, maybe your only option, is to buy EV. So I'm looking to invest in the top Chinese EV stocks because I think they're still undervalued and I think the growth outlook is enormous. Imagine if the United States said you can no longer buy gas cars unless you win a lottery where you have a very low chance of winning, and if you do win, it's very expensive, or you have to buy an EV car. Imagine what the stock prices of Tesla and all the other EV companies, GM, they would skyrocket because people are backed into a corner to buy a certain brand of car, and that is why I'm looking to invest in these Chinese EV stocks. These stocks were absolutely ripping. They were heading 100, 200%, 300% higher because investors know this. Investors aren't stupid, and everybody wanted a piece of the pie. Everybody wanted some exposure to the Chinese EV market. But then something crazy happened, and the House passed a bill basically saying that these companies are going to get delisted unless they meet certain accounting requirements. And basically, it's just a sham. It's just a charade. It's for optics. In my opinion, I think it's just for optics, right? So they're going to get delisted unless, this is kind of funny, U.S. regulators are able to inspect their financial audits within 3 years. So basically, they have 3 years to let financial regulators inspect their books. And obviously, these companies are going to clean up the books within 3 years. They're going to let the U.S. regulators inspect them. They're not going to get delisted. So everybody breathe. If you're a NIO investor, you're an Alibaba investor, you're an XPeng investor, just relax. JD.com, these stocks are not going to get delisted because it's just for show. It is literally for show, not going to happen. But what this charade has allowed us to do is buy into some of these stocks at a discounted price. Look at XPeng. XPEV is the ticker. One of my favorite Chinese EV plays. They are swiftly catching up to NIO as one of the leaders in the Chinese EV market. We called this stock out. We made a video about it right here. Under $50 a share, and then it proceeded to run up to $75 a share. And the touchdown trades community secured the bag once again. But it has since pulled back due to multiple reasons. The main reason being the Chinese EV bill that was passed in the House, or not the EV bill, but the accounting bill, holding foreign companies accountable bill. And then they did a public offering, and the stock dropped from $75 a share down to $45 a share. But I think this is a buying opportunity here in this XPEV stock. Typically, a public offering is bad, right? It dilutes the company's shares, which makes there's more shares out there, which makes a move to the upside require more buying pressure. So typically, it's a bad thing. But I think this $2 billion raise that XPeng just announced is actually a good thing. We've seen this before with Tesla, and the Tesla haters said, oh, they're just raising so much capital, there's so much dilution that this stock is eventually going to crash. It never did. The Chinese EV market is growing fast. It's happening right now. And XPeng realizes this. They realize now is their chance, and they need the capital to grow. And this is a smart move. Get the capital now, get the growth done now, grow right now, and worry about paying it back later. They need to grow now because by 2035, it's already over. By 2030, it's already over. The companies that grow now are the ones that are going to be supplanted as the EV giant in the future. So I really like this capital raise by XPeng. XPeng just announced its November vehicle delivery results, and they were monster numbers, absolutely monster numbers. They delivered a total of 4,000 vehicles in November, a 342% increase year over year. In the year, for the total year of 2020, they have delivered 21,000 vehicles, already an 87% increase year over year. And the whole country was shut down for months due to the Rhinoceros Rex. So imagine if there was no Rona, this company would be delivering probably double that amount of vehicles. NIO delivered 5,000 vehicles in the month of November. XPeng delivered 4,000 vehicles in the month of November. XPeng is fast on NIO's tail. They're catching up to NIO, and the thing is, XPeng is valued at about 1/2 the price of NIO. XPeng has a market cap of $38 billion, while NIO has a market cap of $61 billion. So in my opinion, XPeng is not only a huge growth company, a huge growth stock, it's also extremely undervalued compared to stocks like NIO, right? We take a look at the chart, and the technicals are setting up beautifully as well. We're coming into some serious support areas right here. We have support at the $44 area, 45, and then we also have another huge area of support down around $37 a share. So this is going to be my buy zone. I always talk about having a plan. Your buy zone, set your buy zone. It will be from 45 down here to 35. And then I'm looking for that area to hold. And then I want to see it bounce back up, break all-time highs within the next 12 months or so. And I think that's very liable to happen. This XPeng is undervalued. It's growing very fast. And I think this is one of the top EV stocks out there right now. The second stock we're going to talk about has the most upside potential, but it also carries some of the most risk as well. With potential comes risk. The two are connected, unfortunately, but that's just the way it is. I really do like this stock and the potential it brings. KNDI, Kandi Technologies, he caught a massive winner on this stock as well, calling it out around $11 a share. The stock proceeded to run up to almost $18 a share. We've been straight crushing it here at Touchdown Trades. We are straight killing this EV sector. But Hindenburg Research, the same short seller that came out and nailed Nikola right on the head, they did get Nikola right, came out a week ago and said that KNDI was up to some fraudulent stuff. And it wasn't a good look initially. They said that basically KNDI was selling a lot of vehicles to the same company who had associations with KNDI. And basically it was a scheme to up the revenue and to mislead shareholders. KNDI's board came out with a shareholder letter today and disputed the report. And the stock reacted very well to the shareholder letter from the chairman, from the board, and the stock is up about almost 20% today. So investors and the market responded very well to the dispute of the short report. And I like to see when companies are attacked, we want to see right away that the board, that the chairman comes out and says this is not true, and that's what happened here with KNDI. And once the short seller came out with a report, what happened? What do you think happened? People sold out of their positions and more short sellers got involved. So the short float right now is 18%. So 18% of this stock is getting betted on that the stock is going to go lower. And what that can create is called a short squeeze. So basically everybody gets short. They sell short. And what happens is if the stock finds a bottom and starts to head back higher, everybody who got short in this area has to stop out. And the way they stop out is to buy. So it creates a buying frenzy called a short squeeze and can send the stock skyrocketing higher. I think that is a very, very likely scenario in this KNDI stock. Also, it's just flat out too cheap. Compared to its peers, KNDI is just too cheap. They have a market cap of under $700 million on sales of $100 million, giving them a price to sales ratio of 6.2. Let's look at some of its peers. Let's look at NIO's price to sales ratio. NIO has a price to sales ratio of over 30. How about XPeng? XPeng has a price to sales ratio of 94. And those are two fast growing companies, but so is KNDI. So I think this KNDI is undervalued, it's too cheap, and I really like this stock. All right, the last Chinese EV stock that we're gonna break down is Li Auto. Li Auto, very similar scenario to XPeng. They came out with a public offering, and I think these Chinese EV stocks, they realize that right now is the time that they need capital to market, to ramp up production, to ramp up manufacturing, R&D, everything. So Li Auto raised capital. The stock dropped like a rock from $50 almost down to under $30 a share. So we have an extremely fast-growing company getting offered to us at a discounted price point, and I think we need to take advantage. If we look at the chart is setting up nice. We have support here at the 2750 area, and we're coming right into that area. I think we hold and we head back higher and retest $40 a share. So I'm looking at Li Auto, KNDI, XPeng as really good deals in the Chinese EV sector right now. Let's touch base on NIO real quick. A lot of NIO investors worried about the delisting talk, and I don't think it's going to happen. I would put the odds at 99%. these big Chinese EV stocks don't get delisted. Maybe some sketchy small cap penny stocks do get delisted, but NIO is not going to get delisted in my opinion. And I think there's better deals out there, right? In the space, I think there's better, cheaper stocks for your money. But if you're looking to swing trade, this NIO is setting up. We have a defined area of risk, what we look for in swing trades at this like $39 area. And we would look for this thing to break all-time highs. We have our risk, we have our price target, our profit target, and we have our stop loss would be down here somewhere. So I do like NIO for a swing trade. I think there's better opportunities for your money right now in the sector. All right, guys, that's going to wrap things up. If you haven't yet subscribed, please subscribe and hit that like button, as it tells YouTube that these videos do provide value and offer good content. And check out the link in the description for Webull. If you want to check out the best broker, the link in the description, deposit $100 or more, you will get 4 free stocks valued up to $1,600. You can't beat that deal. All right, guys, that's it. I'll catch you on the next one. Until next time, peace.